Okay, so we're going to be getting joined by the mob in just a few seconds, but I wanted to throw out to you today what we're going to talk about. Really important topic, the investment whisperer. There are so many people that are investing in properties, and as realtors, we oftentimes get psyched out by it. We didn't think of ourselves as necessarily the kind of person that could lead an investor to a great opportunity. But I'm here to tell you that you can and that you should, because face it, the investors are always going to be there. They're going to be doing multiple deals. There's a buy side, there's a sell side. There's something that they're going to continually do over and over and over again. Doesn't that sound appealing? Wouldn't it be nice? Wouldn't it be great to get some predictable business? Well, that's exactly what today's meeting's about, but not before we let the mob in. Let's get going here. Okay, folks, we got all these great people joining us today. Loving it. Got Dirk in Denver. We got Zaynep. We got Andrew Fishkin. We got Deneen. Got Greg. Fantastic stuff. Renat, Karen Knox. Okay, good. Everyone's ready to invest. I love it. Okay. How's everyone doing? Yeah. Oh, yes, Ed. I feel good. Yeah. Oh, wow. It looks really good. Oh, well. Okay. Karen, thank you. Thank you, Karen. Karen wins the good doobie prize.
Good morning.
Good morning. Love that. Okay, we got a few other people that are going to be joining us. Um, and I'm going to let them all in. Just a couple things for you to note. We've got a great meeting. This meeting is extremely important. In fact, so much so I'm going to be doing it again on Friday at 12. If you'd like to come twice, that would be fine. We're looking now to try and get some other um, investors to pop in if we can. Maybe that's a big one. Next week on Wednesday, 9 a.m., turning Zoom meetings like this one into uh, sales opportunities. Uh, I get all my ideas from you guys. I get all my ideas from people who've suggested some stuff. Somebody told me that they were getting an email or seeing something on social media about advertising, or not so much advertising, but hosting meetings that are very much like this, but talking about actually moving into that area, or how to sell a home in Newport Beach, California, or in Denver, or in South Carolina, wherever you might be, and how you could actually use a meeting like this to be able to gather people and gain some interest. I investigated this. I'm actually planning it for myself. It's called Destination Florida, and I'm making a deal with a few of you who are actually in Florida to be able to do a cooperative advertising to be able to reach out there. In any case, I think it's an interesting prospect because I just see so many of you that I've been able to build a great relationship with. Even if I've not met you in person, I feel incredibly close to so many of you. Um, and I think it's an interesting tool. So we're going to be exploring that. That's next Wednesday, 9 a.m. I sincerely hope that you could make that. We're going to have that. I'm going to mention that more than once today, just for the sake of getting in there. Okay, 9:03. Let's talk about these investments and what people are up to. I know we oftentimes default to Dirk, who already has a portfolio of investments, but I just want to know how many of you, and I'd like to see a show of hands, just opening up my other computer here, how many of you have worked with investors? If we could just see a show, okay, Eitan, Dirk, Greg, who, if you're not showing your face, if you don't mind, like virtually raising your, Lavette, oh, good to see you, Lavette, great having Lavette here. Who else? It's got to be more than the five. I don't believe it. Mark Lawrence, Deneen, Zoom user, whoever that Zoom user is, that's great. Okay, so let me just get this thing on here, guys. Sorry. What was the highs and lows of working with them? Where was the plus? Where was the negative? If you could actually tell me, what was the value?
Hey, Ed, Dirk in Denver. I would
Great,
say
Dirk.
one of
Thank you
one of
for
the
taking the time to introduce yourself.
yeah, no, one of the hardest things I think working with investors is actually qualifying them and knowing that they're ready to move.
Agreed.
So we come across deals as agents all the time, and people tell us they're always looking for the next fix and flip, the next investment. But when you actually bring them the deals, few and far between are actually ready to move. So I would say the qualifying really plays a big part.
Okay. Who else agrees with Dirk? Okay, Aton's waving his hand wildly. I guess he's frustrated with somebody there. That's like, yeah, me, pick me. Livette, can you unmute yourself? Say who you are, where you are.
Hi, I'm Lavette Bell. here in Southampton Roads, Virginia, specifically Norfolk. And I agree with Dirk. But I want to add that when you are a woman dealing with mostly male investors, you know what comes along with that. I've gotten lots of inappropriate propositions, as if, getting them a house or, selling them a house wasn't enough. So, yeah.
Hmm.
And for that reason, because it was happening so much, I honestly just don't really work with them anymore.
Really?
Mhm.
That
So I
that
stick to the seller side. And when they come as a buyer, of course, I treat them much differently. They don't really have any, leverage in a situation. But yeah, it was happening a lot. And yeah, a lot of my female colleagues here, they've experienced the same thing.
Yeah, because I haven't. I mean, none of my investors have ever hit on me.
Mhm.
I'm joking. I'm sorry. Okay, bad. Too far. Too far. Maybe too
Yeah.
far. Okay, sorry about that, guys. Let me just say, well, Levin, I'm sorry that happened, but I don't want that to drum you out of the business entirely. Let me talk to you about two relationships that I have right now, and what kind of helped me really facilitate this. One of it, and I'll give you the names, the Markovich brothers. These guys are great guys. I've done 5 or 6 deals with them already. There's a buy side, there's a sell side. They do this year. They've only done 10 deals, which for them is incredibly small. They are fixers and flippers. So what their mission is, there's no emotion in the house. It could be purple. In fact, it's better if it is. They want it just ugly, beaten up, flooded, whatever the hell it is, roof caving in, fantastic. From their standpoint, all of that are positive attributes. Dirk is nodding. I like that. So, from their standpoint, all of these things are extremely positive attributes. As far as um, why I like working with them. A, they're great guys. I mean, I'm friends with them, and they're great people to work with. But B, and I think really important for everyone to see, is that traditionally, when somebody who fixes and flips has someone that brings them the house to buy, they reward you by allowing you to sell that house. Raise your hands if that has been your experience. Dirk is slowly nodding. Greg is raising his hand. A couple of you, okay, Deneen, I'm going to pick on you in a minute, Deneen. And Zoom user, whoever the Zoom user is, great, raising the hands. So fantastic. So we know that there's two sides built into this. Mazel tov. Fabulous. We love two sides being built into a deal. So I want to emphasize this because the problem is, and from where I sit and from who I speak to all the time, all of you become much more of a order taker than a broker. Sorry, not sorry. I'm just seeing this over and over again. That you guys are, something comes up, somebody in the neighborhood calls you, you see a property online, and what I'm trying to get you to do is get you to think a little bit more proactively. When you leave the meeting today, I want to have in your vocabulary the words 1031 exchange. All of you might have heard it, but you might not really have defined it. Cap rate. Okay. All of you probably went through school, or maybe your Realtors Association made you learn it, but I want to talk about why that is so important. Um, Underwriting, what that's actually going to mean and why that is really important. Doing an analysis on the actual property. I could show you in prompts, which I will. I'll show you a little app that I made for my team. I'll gladly give all of you access to that as well. The idea is this: if the traditional model for realtors has been, we market ourselves, we get the listing, we market that listing, we sell the listing. Hopefully, in the process, we get a reputation in the neighborhood, get more listings, get buyers, get multiple transactions for a single deal. Great. Not telling you not to do that. What I am saying is if we know people's business model is to actually buy these properties, man, you should be hammering away at this. Just stop and think about it. These are people that will take the call. These are people that, it's like, hey, Greg, it's Ed. I understand that you've been investing in properties in this neighborhood. Do you have a minute? Okay, that's it. Very few people take that very extremely upfront conversation with them. Most of them will say yes. They might say, look, I don't have time right now. Call me a little bit later. But if you, depending upon how you present yourself, they're going to respond and respond pretty well. Why? Because it's hard to get these deals. If it was easy, then everybody would do it. Sometimes finding things. Now, let me talk specifics about this. With the Markovich brothers, we had a listing that was listed here because the family was an estate. The family had it listed at well over $1 million, which it wasn't worth. Then time passed, and the family got together and said, "You know what? Let's get rid of it." That just happens. Sometimes there is market fatigue. We did our part. We stayed on top of it. We spoke to them all the time. We did all the things that I'm recommending to all of you here. Kept in touch with them, gave them reports, marketed the place. The price was just too high. So once we dropped the price, we knew because of our relationship with the Markovich brothers, okay, I think this is something that you could actually use. They wound up buying it for $650,000. Okay. They are now almost done with the renovation. It's been about 7 months. We're getting the listing. It's listing for 2.3. It's
Good
pretty good.
profit.
Yeah,
Yeah.
it's pretty good. Now let's assume that I'm $300,000 too high. I'm not, but let's assume that I am. It sells for 2 million. They bought it for 650. Maybe they put 700,000 into it. Okay. So now we are at 1.3. Even with the holding costs, that's a pretty damn good return. Not only that, but it gets us to market in a neighborhood that we like. It gets us to have an even better relationship with these guys. They joke with me because I live, as you know, in a gated community that has a restaurant. And on Wednesdays, it's skirt steak day, and this guy loves skirt steak, so he wants to come over for lunch because he knows that I'm going to buy. I'll buy everyone here. I'll buy a skirt steak. But this guy, so we have that kind of rapport going back and forth. And guess what? It's worked, and it's worked with this deal, and it's going to work with others. So the question becomes, how do we actually find the deals for them? No emotion involved. It's all money. I love it, and I want you to think that way too. So let's get some stories going here. Greg, and then we'll get to Deneen, and then possibly Dirk again, although I suspect that we'll get back to Dirk several times here. Greg, tell me about some of the investor clients that you've had.
One in particular is a builder. Um, he just loves to flip properties. He's now transitioned his business to his son. So he's doing a lot of fishing and a lot of playing on the stock market. But his son is actively looking for historical property. He's in partnership with another gentleman that is a fine craftsman and does historical properties. But it's find it, um, help him buy it, watch him work on it, and 90 to 120 days later, put it on the market and sell it.
Fantastic. And you've done one deal, two deals. How many deals have you done with this person?
Um, Four.
You see that? You see that?
So
Like,
four sides. So
four
two
sides. Okay.
houses.
Four is fair. Let's stick with four. Sides, I get it. Sides are great. Um, but to actually create this as I always play in threes, three different marketing approaches that I take. I'm a farmer. I'm on my social media, which includes my email. Um, and I host meetings. And those are my three primary tools for building out my business. And I'd love for all of you to start to think in terms of three. There's certainly many other things that you could do, but when you take on way too much, sometimes you really can't do it quite as well. I think for most of you, this is an ignored asset, um, the investor, and I think it's a good one. Let me pick on Deneen, and then I'm going to get to Mark. Deneen, can you unmute? Deneen is unmuted. Hey, Deneen.
Good morning.
Good morning. So tell everyone who you are, where you are.
I'm Deneen and I'm in Newport Beach, California.
Great.
I've been doing this almost 30 years and I have probably, oh gosh, 40% of my business is maybe not fix and flips. Well, yeah, I guess a lot of it is. Yeah, over the years, I've just met a lot of people that are looking for a deal. I mean, I just did closed one in March where the owner is a builder and he's buying this house. He just bought one and he's fixing it up, but um, renting it out to his son, who's just getting married and having a baby, and they're doing that. But I was working with a group of guys that would find anything, same way that Dirk said, the uglier the better, and they just fix it up and flip it. But prices have gotten so expensive here, they've moved to other areas where it's much more affordable.
Sure.
But I have an investor from Northern California that I don't even remember how we met, but he came down and just bought a condo. And, the prices keep going up here. So he's so happy. I just met with them last week. He and his wife came down and we had dinner. He's owned the property for about 3 years and I just rented out for him. I get a lot of these people from doing rentals, which
So expand upon that before we get to Mark. Tell me what that, how that, tell me how that looks.
somebody I get a lease. I forget how I even get a lease, but somebody has the need for a lease. Either they own the property or they want to have a lease, so then they're looking for something to buy that they could lease out. And it's expanded. I mean, I've told this story before, but I did a lease for a family, and then they were so happy with my services, they referred me to a friend of theirs who ended up owning a $10 million oceanfront property, and I got to sell his home, which was quite a bonus. So you never
Incredible.
know where it'll lead.
Yeah, it's really true. I love that. Hold the thought. I want to bring Mark in for a second. Mark, if you could just unmute yourself. Um, so Mark, you want to just tell everyone who you are, where you are?
Sure, Mark Lawrence in New York. Previously, real estate attorney, real estate agent in the last 20 years, national title insurance provider. So I've closed deals everywhere. Um, so both residential and commercial. So I'll add in that perspective. One of the things I know we talked about qualifying commercial, or buyers of investment properties. You're also dealing with, getting financing is a different kind of bucket than, residential primary residence financing. So that's a little trickier, very numbers oriented, DSCR lenders, other lenders that are involved. And I'll also, I know you touched on 1031, which is another space that I do a lot of work in. But that's definitely something to factor in. Not for flippers. Actually, it doesn't apply. Actually, you have to buy, and hold, rent out. But definitely if you are, in the business, or if you're Airbnb it, that's something down the road you could take advantage of 1031. And really that will help your numbers tremendously, because what you're doing is you're deferring the payment of your capital gains tax. So if anyone has any further questions about that, I know Ed touched on it. I don't know how much he wants to dive into it, but the 1031, is, and then oftentimes it's not the fit. So when I do talk to people about it, I'm not trying to fit them into a box, even though we have, a DST, which is called the Delaware Statutory Trust product, which is a passive investment, which qualifies for 1031. But there are, different options with respect to tax deferral mechanisms.
So
Keep that in mind.
let me bring this just full circle so everyone understands. Just I'm going to assume that everyone's heard tax 1031, but let me give you 90 seconds about it. A 1031 is tax free, which means that what you're really doing with this is, or I should say, tax deferred. That you're really buying a property at X, it goes up in value. You're identifying another property, you're selling that, putting all the money into this. Now, here's some things that freak the brokers out. The investor, once he sells one property, has 45 days. Mark, it's still 45 days, nod wildly if I'm right.
Yes,
45
45
days to
days.
identify the destination property that is, and then 180 total days to close that property. Realtors that I speak to hate that. Oh my God, they feel the pressure. It's so awful. It's this. Let me tell you this. This is how the fortunes have been made. And this is, Congress is arguing about this right now. What they do is people will kick the can down the road, if you will. Property values continue to go up and up and up, and they own it. And then guess what? With the real big real estate families, they die. They die, and the kids get what's called a stepped up basis. meaning that they might have brought the property for $1 million and now it's worth $10 million. It is going to be taxed at the rate. When they actually sell the property, it's going to be sold at the actual market rate. There's different debates and nuances that you could do, but if you have ever been curious about how people have made an absolute fortune in real estate and why this is so unique, I just want to share that with you. Again, for those of you like Mark who know this and Dirk and all this, I'm just going to assume that a few of you may have been hearing this for years but never had the guts to actually ask someone. I'm just here to tell you. Deneen, want to comment on this?
Yeah, I just did. I'm doing a reverse exchange right now,
Reverse exchange, do tell.
where my clients are bought a property in March
Great.
and they bought it and they're going to fix it up and they're selling a condo. So I got the condo sale to pay off for I mean, they used investment money, but now they're going to replace the money with the condo sale.
You see
So,
this?
yeah.
You see this? Great stuff. I think everyone, it's overlooked because we're so used to being, the nice guy in the neighborhood. At least I am the one that actually pushes the relationship with people. And I'm not saying you shouldn't. I'm just saying if this has been ignored, it's time to not ignore it. Learn to speak the language a little bit in the course book that we have. We call it the Investor Whisperer. You like my title? Maybe, kind of. Sucks. Good. I don't know. Anyway, that's all we got, guys. That's we got the Investment Whisperer. You're going to read within this, it's like 14, 15 pages. I suggest you print it and you could get some of the terminology from here. There's also a great opportunity to use some of the prompts where you're actually figuring out what to underwrite. One of the things that I want to share with you, and I've done this before, but I'm going to do it here now, is a tool that I made. And again, you could do this, not that, not that. There's too much stuff on my screen. There we go. So I made this tool for my team because we have someone who told us that, and he's a very real investor, sold his business to BlackRock, now wants to buy dozens of homes in Florida. Problem is, where I am, we can't satisfy it. And what do I mean we can't satisfy it? We can't satisfy his desired 6% cash on cash return. It's just like right now, that is very, very rare. Can you get it? Yeah, you can, but it's kind of like triplets. They don't happen that often. But you could see we have one, two, three. Oops, let me just get rid of this. We could put in one, two, three, four um, uh, Happy Road. Okay, it's not anything real. And the guy's going to purchase the property for $650,000. No, we'll make it a better deal than that. We'll make it $1.5 million. There we go. And now they want a 6% cash on cash return. If we want to exchange it, turn it higher, we can see that these numbers actually change based on the amount, the rental income in this instance. We can make it $12,000, and you can see how the actual numbers are changing here. That's a little ridiculous. People probably won't. Now we'll see that he's got a $6,000 return, and the guy's now a $6,000 rent, and the guy's going to get a 1.2% return. That's what I've been up against. I've been up against this, but it's a great little tool for you to drop in. And property tax is 1.9% of the purchase price. That's a good ballpark. Insurance, you could debate. Uh, we have a CapEx. CapEx, anyone know what CapEx is? Okay. Want to tell us, Greg? No? You got to unmute, Greg. Still have to unmute. It's a button on the right. There you go.
Am I unmuted now?
You are.
Capital expenditures, it's the reserve you hold back to put a new AC in or put a new roof on.
Sure. So, and this guy in particular is very smart. He's been telling us that he wants to buy new construction. Why do you suppose he'd want new construction?
Less maintenance.
Exactly. Less maintenance. He can have it for whatever period of time he plans to hold if he's bullish on the area. This is just, by the way, the return on the investment of what the cash flow that's going to be coming in from the rent. I'm not counting capital appreciation. Now, just think about that. Capital appreciation, let's dumb it down just a little bit. It's just the market increasing in value. How high did inflation hit us in the last 12 months? Anyone want to have a guess?
2%.
No, you're so
Oh,
generous.
inflation. I'm sorry. I'm talking
Inflation,
prices.
inflation, 4.2%. Inflation was super high right now. That's why interest rates aren't going to be cut right now. And again, I'll go through this very quickly. Interest rates you can imagine as a gas pedal that you actually step on the gas when you want to actually go a little bit faster, but you got to release the gas when you want to go a little bit slower. If you're actually going already very, very fast, you need to slow down. What's going on with the economy is when there's more cash that's out there, when there's inflation actually going on, the way that you actually curb inflation, or one tool, is to make getting cash a little bit more difficult. You're pulling money out of the economy because you know that when you've heard people say the words buy a loan or buy cash, that's exactly what they're doing. They're saying, okay, it's going to cost more money to borrow this money, so therefore there's going to be less supply. And what happens when there's less in the world? Goes up in value, right? When something's rare, it's going to be a little bit more expensive. Again, don't mean to get just into all the basics, especially for those of you who really understand this, but I think it is a good exercise to stop and think about it. So interest rates are something that, based on what I see with inflation, we're not seeing any major cuts in interest anytime soon. So if anybody wants to make the argument with you, if this could be the best thing you took from the meeting today, if anyone wants to make the argument with you, just go to ChatGPT right now. Well, in a minute, and just ask it, how much has interest rates gone up in the last year? Or sorry, how much has inflation gone up in the last year? What it means is if something cost you $1 last year, when the money is going to be less valuable, you're going to need to spend $1.04 to pay for that same product. Why is that good for real estate? Somebody chime that in for me. Anybody, throw it out there. Why is that good for real estate?
Well, your values go up
Why?
because I don't know, they're not selling as much. I don't know.
Because every nail, every brick, every piece of plywood goes up in value.
Mm,
The replacement cost goes up higher, and therefore the property goes up higher. So that is why this is the great hedge against inflation. Because by definition, people are going to be living somewhere. And if the replacement cost of a home is so much higher, that means that the actual price of the property and the price of your property is going to go up. Rising tides raise all ships. I like to say this in every meeting. I'm the poorest guy in the wealthiest neighborhood, which makes me very, very well off. I'm extremely well off, much more so than most in this world. I've been blessed. It's great. But still, I understand that when I get into a room with people, I'm oftentimes in a room with billionaires, 100 millionaires. I'm not anywhere near any of that. I mean, that's not anything that I could touch. But I'll tell you this, it's been a great place to be from a sales standpoint if you know what you're actually trying to do and how you're trying to talk to those people. If you're trying to actually get in with this. Here's another thing. A lot of people have come to me, Ed, if you find a great investment, I'd love to invest. Now, this is Dirk's problem here. Okay, great. Are you for real? Because I could dress it up and bring them the world's greatest investment, and then they get off the trolley. Is that what happened to you, Dirk? Yeah. And then they
All
get
the time.
all the time. And they get off the trolley and they don't do it. That's why a proven buyer is going to be great. So here's what you're going to do. You're going to actually go to your MLS. You're going to take a look at some of the names of the buyers, or I should say actually the tax records. You're going to be able to find out, does the properties in this area belong to an LLC? In Florida, we have something called sunbiz.com. Sunbiz.com is actually owned by the state of Florida, and it's where you look up the ownership of some of these companies. You could drive, I see outside, right outside my window here. Well, my fake screen is on here, but outside my window, Eric Pierce, his sign is up. Another beautiful home being delivered to you by Eric Pierce. Okay, so I know Eric. Great. Eric, what are you looking for? He's always looking for something. He's just been really, really tough in his criteria. Whereas the Markovich brothers, the guys that I'm working with, they've been, I've got a great rapport. It's certainly worth buying them a skirt steak every 3 months. I could just tell you that it's been so if you start to think of that and you look at yourself more of a deal maker and less of an agent, you now become something that's a real valuable tool. Read the stuff, learn the terminology. It's not that bad. It really isn't. It's just if you get psyched out by math, just remember garbage in, garbage out. If I give you a dollar and somebody gives me back $1.10, I made a 10% return. Keep it really simple. Okay? So let's just go on with this for a second. So we got the operating expenses, insurance, capital expenditures. That's great. In this instance, we didn't put it in an HOA because the guy wouldn't be able to rent it anyway, or at least not as easily. And then maintenance, 5% of collective rent. Maybe, maybe not. What happens if I take away the maintenance or bring it down to 1%? Up, you see, let me highlight this and I'll make the maintenance now. You see the 1.3 on the right? Ooh, 13% makes the cash flow to go down. So you can see the tool is terrific. What I'm going to do here is just give this to all of you if you want to try it out. If you want to build your own, that's great too. But, ugh, okay. Let me just see. Okay, so that it was a very long link, but it does work. So do yourself a favor if you like it, if you like the idea, click on it now and keep it up on the screen, and you can take a look at that and see for yourself what's going on. Questions so far? I'm talking a lot. I'm sorry. Maybe Ferris Bueller? Anyone? 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 Okay. Um, if you go to the third or fourth page of the course book, it's got several different prompts that I want you to know about. Uh, what I'd like you to do is take a look at the second prompt here for comparing multiple properties. That's going to come up. We need you to do this. We need you to fail fast because you fail a lot when working with the investors. What do I mean by fail? I mean they just don't do a deal. Thanks, but no thanks. It's not going to be great. Compare multiple properties here. Compare these three investment properties side by side for a client whose buy box is a minimum of 6% cap rate. Obviously, you see where my head's at because I got this investor that wants 6%. Positive cash flow at 25% down. And it says market. We could say in the Denver market. Um, you could paste the property in the details, paste property two in the details, property three in the details, build a comparison table of price, NOI. Anyone NOI? NOI? Just shout
Net
it out.
operating income.
Net operating income.
Operating income.
We love it. Great. Okay, so NOI, cap rate. Anyone want to explain cap rate? It's capitalization rate. So you take the purchase price of the home and the rental amount, the projected NOI, and you're going to divide the NOI by the purchase price of the home, and it will come up with the actual return. You got that? Hold on. Dirk, you're staring into what? Did I say something wrong? Did I reverse it?
The way we do it is rental income divided by operating expenses, not counting any mortgage.
Not counting any.
And
It's a good point. So this is free of mortgage, free of debt.
yeah.
So mortgage comes after the setup. I'm glad you brought that up. Okay. So if you just learn these few things, you're going to be able to have conversations that, believe me, these investors are not expecting you to tell them so much. They want to get on and off the phone as fast as possible, but they want to be able to find these deals. Now, where are some of these deals that you could find? You have a friend who's in the EMS, fire department, Stanley Steamer. Have you heard of Stanley Steamer?
Yeah.
These guys are looking for a shithole. Find them a shithole. Okay, so that's one idea. Another thing that you could actually find, do you have Airbnb in your area? The government is after it. And why? Because the hotels are after it. They don't want them in business anymore. But in some areas, it's very free. For example, it doesn't work very well in Boca Raton, Florida. It works very, very well currently in Delray Beach, Florida. Well, they abut each other. I work Delray Beach. It's 15 minutes from me. It's right here. So know the area, know the laws, try and get familiar with all of this, and know these prompts. If you could actually get all of this, you could then begin to do a test on where these properties lie and what's going on. Who had questions? I'm trying to see here. Okay, Dirk, give us the best and worst investments that you've done. If you're comfortable talking about that, I hope you are.
I don't have worst, fortunately, because a pre-qualifier when I was actually flipping houses personally is if there wasn't $100,000 of profit after rehab, we wouldn't even touch it because we knew that we were going to be in the swamp at that point in time. So I think we passed on a lot of deals because our underwriting might have been a little more stringent, but it's kept us in the green on every investment.
And how many were there?
I did about 15 flips personally.
Okay. And it worked out well each time.
Yeah, I mean, there's three partners, so at least we were hoping to make the $100,000. If we missed, there was still some profit to be split. So sometimes your hourly return was not the greatest, but other ones it was fantastic. So all in all,
Okay.
good experience.
Okay. Deneen, was that a cough or was that
Yeah.
okay.
No,
Okay.
sorry.
Greg, you had your hand up.
So, you haven't mentioned intermediary yet, and that's something, if you don't know about 1031s, you need to understand that it has to involve an intermediary. And an intermediary, if you make a good relationship with one, can become a good source of referrals for you.
Fantastic. Very, very smart. Absolutely true. That if they see that there's business coming in for, but you know what? I say the same thing about your CPA. I pay my CPA a lot of money. I want him to give me lead. It's not that tough. I've got two CPAs for two different things. One of them gives me leads all the time. The other one, not so much. But you need to start rethinking where this stuff could come from. Yes, a 1031 intermediary is really important. Where did you get your 1031 intermediary from, Greg? Or how do you know one? You're still muted.
Yeah. Interesting. I'm working two screens, and that's messing me up.
Sorry.
Interestingly, through my brother, who also is an investor, a flipper, and he had a couple properties here in Charleston that he wanted to offload. I had an intermediary, but not one that I had a good relationship with. Now I've got one that I've got a really good relationship with. Interestingly, her office is in Newport Beach, Denny. Um,
Oh,
but she works nationwide, so and she is phenomenal.
oh, you'll
Great.
have to, yeah, share her name.
Yeah, definitely.
Okay.
That's what it's all about. By the way, share the name. If there's some business there, you get the street credit for. I give everything I can to everybody. I think that the street credit is so huge. We should probably do a meeting on it at some point. Um, so yeah, you then just need to really understand what the investor wants, what they want. Are they Airbnb? Are they fixer and flipper? Are they somebody, is Michael Varoukas here? I don't think he is. Okay, that's a bummer. Michael found some great condos in Nashville. He just, again, it was primary research. Loved the barbecue, loved the music, loved the scene, saw what was going on there, saw how the market was moving, said, screw it, I'm going to buy myself a place, bought himself a place went up in value, got a loan, bought another place in the same building, rented out the first one. Did that four times because he saw it going up, made a lot of money based on what he actually saw. So if you're actually looking into investing, you shouldn't pull yourself out of the equation. If you actually buy a place and then keep it and then go on to the next place, it's one of the best strategies that you could do if you're trying to go small. But that's for another meeting. I think right now we're still just trying to identify more and more investors and where the opportunity is. I hope that this is coming across well, and I hope that all of you are seeing the real value of being able to captivate. I mean, you got the leads. They're all out there. They're dying for you to call them. They're dying for the opportunity. Now it's a function of the kind of research that you're going to be able to do. Enter AI. What I want you to do in whatever farm area that you think would be good, get a data dump of all the information that's out there. Two different types. One, what are the listings, whatever criteria that you want for those listings, the actual dollar amount. And two, what are the rentals in that area? And you're going to make two different studies on this. One, you're going to find out what the actual market looks like, the dollar amount, high and low, lowest price, highest point. Two, you're going to find out what the rental market is right there. And then from there, you could come up with your own theories about what the value is. If I want a 6% return, how much can I pay for a property, right? If there's a property that rents for $2,500 a month and we calculate the regular expenses, remember, it's going to be vacant perhaps 1 month a year, hopefully less. Maybe it's 5%. I don't know if you sign 2-year leases. You got, again, leaving aside anyone that might screw you over. Again, somebody would say, well, I could get screwed over. Absolutely, it's always out there. We could talk about tenant screening as well. First thing I like to do is look in their car. If the car's a shithole, the house is going to be a shithole.
Hmm.
Sorry,
Hmm.
Aton. Aton's car is usually messy. Okay. In any case, not even a chuckle? Okay, sorry, I got him all upset with me today. Uh, Okay, so going through that kind of analysis, you could then determine where the actual return would be in your own neighborhood. Now you're getting authoritative about this. Now you can see that within whatever area you're going to be in, the properties are going to be listed here and the rent is over here. And you'll be able to begin to identify very quickly what might be a good thing. Notice none of these are your listings, at least not yet. Now something buzzes on your screen. You're looking at this and there's an anomaly. There's something that's listed for 450 and it's renting for $4,000 a month. Again, I'm just throwing numbers out there. Ding, ding, ding. There is an opportunity. There's a chance for somebody to make money. It might be you, but it might be somebody else that you could call. What I do is call the Markovich brothers or this other guy that I've been calling. I end up calling them, and guess what? They buy. They buy, and then there's the opportunity that you've actually gone for. Lean in on that. Very, very simple prompt. Take all the data that you can from one particular area, the exact same area, you get the selling data and the buyer data and the rental data, and you make 2 different studies on that. And you're finding out just what the rentals are in there. And then from there, you could reverse engineer it. If a property is renting for $5,000 a month, calculating regular expenses, how much should that sell for? What's the maximum an investor would pay for that property if they want 5%, 6%, 7%, 8%, whatever percent return you want? And the AI will tell it to you. And in fact, in the case of Claude, you could tell it, please put this on a spreadsheet for me. Guess what? It's done all the work for you. You now have this great ability and great tool. So I just throw that out to all of you as something to think about. I also say to you this, if you take that challenge, I want you to email me your results. And if you take that challenge and put something together and really work on it and really put it together, we could pick up a call for 15 or 20 minutes to see how you could actually work it. I mean, my coaching client's a meeting with you anyway. But if you really take an interest in actually doing that and you want to go a step further and really try it, go ahead, do the prompt. As I said, this video is going to be in the archive. I suggest you watch it. If you could come back on Friday, I suggest you do. You're going to have a lot more to say then. There's going to be more ideas. But a lot of this ends up, I want you to go beyond the experimental into an actual practical work that you could do. Okay, just a couple minutes more here. Who's got questions, comments, anything? Deneen keeps giving me the
No,
thumbs
I
up.
think
Thank you.
that I'm going to do that for Friday.
Good. Good. Come up with stuff because it's this type of exploration that really leads to great opportunities. We don't consider it, but there's just so much that's actually out there. And if you just take a little bit of a proactive stance, you'd be surprised at how far you could actually go. I'm a big 15-minute fan. Try and put 15 minutes a day into this for a month. See what happens. You screw up, it doesn't work, it doesn't work. I think it will, though. I think that you'll have some real opportunities. Okay, before we get to wants, needs, and brags, anyone else on this topic that wants to make some comments? Okay, one other thing I want to share with you before the wants, needs, and brags. We have the meeting. That's the Bogen method. That's this. Okay, so it's going to be next Wednesday, the live seminar Sales Machine, Sell the Room Live. What we're doing right now, we are having a mastermind. I want you to build a mastermind on your own. Dirk, how to buy or sell a property in Denver. Okay? You're just the man to do that. Greg, same thing. Mark Lawrence, same thing. Deneen, are you kidding me? All of you, I want you to strongly consider it. If you've been to this meeting and you think that there's a value to having a mastermind or a Zoom, there's a value to people who are really curious. And to that end, I've created, ta-da, Destination Florida. Okay, let's put all of Florida on stage and we'll split the cost 13 ways. I am reaching out to 13 different agents in 13 different markets that don't compete with me. I want them to put in $1,000 each, and we're going to advertise that on Facebook in different areas, and we're going to actually put on 2 or 3 different meetings for that event, for that expense. I think it's a pretty good idea, and I went ahead and built this out. If anybody's interested, I could show you how to make it for your area and you could rip this off and duplicate it. But look at this. Isn't this great? Now we got, if we get somebody in Miami, Fort Lauderdale, Delray Beach, Point Beach, Deerfield, Palm Beach, blah, 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 yada, yada, yada. And we move on with all of this. Right now, I'm probably doing this um, with Alicia Warburton. I don't think she's here now, but Alicia expressed interest, and so did Marlene DeCepitis, who's um, in Orlando. So we could actually show just what the actual price points are. It is a great tool that's going to be next Wednesday, 9 a.m. If you'd like to come to that meeting, look for the invite. I think it's an important one, but I'm going to show you specifically how you can put your own Zoom meeting together and actually profit from it. Great tool. It's working well for me here. I got to tell you that. I think it could work really well for you. I hope you can make it there. And with that said, wants, needs, and brags. Now's the time of the meeting to talk about what you want, what you need, and what you'd like to brag about. I'm going to Europe. That's kind of cool. In July,
Where?
going to harvest honey in France,
Oh,
like I did
nice.
last year. I think that's kind of cool. I'm going to be in a bee suit and go and get the honey. So I'm really kind of excited by that. Eitan, please, what do you want to brag about?
I don't want to brag. I have a complaint.
Okay, Eitan, what's your complaint?
You are coming to Europe and not dropping by Lisbon
It's a
to see
big
me?
continent, Eitan. It's a big continent. I don't know what to tell you. It's a big continent and you're losing out to the bees. Sorry.
Well, I'm officially complaining. We
Okay.
also have bees, by the way, and
You've got
that I
bees
would
too.
like to
Yes,
brag
you've got bees
because
in
I'm a
Lisbon. Yeah,
beekeeper now,
but
by the
but but
way.
your bees aren't as good as the French bees. I'm sorry. I'm just kidding. Uh,
They're
Mark
much more
Lawrence.
aggressive, I must say.
Mark Lawrence, please.
I'll put this under wants. So I was an early investor and I'm a strategic advisor to an AI infrastructure and data center company that's
Okay.
publicly traded on NASDAQ. So I've learned a lot in the past couple of months about the data center space. So if anybody ever comes across anybody in that space, anybody would be really a good introduction. Just from networking, identified 2 very large sites, potentially for acquisition, but will any powered real estate, as we like to call it. So if it's hooked up to the grid or has potential to, then it's maybe a play for a data center. Obviously, you have to deal with communities and whatnot, but it's an interesting space, sub niche of the real estate field.
Great.
Hey,
And
Mark, I'm working on a data center in Lisbon. I'd love to talk to you about it.
Yeah, actually, we were actually. I was just speaking about a few things in Romania, so I'd love. Yeah, Aton, I will reach out to you. Definitely.
I love
Awesome.
bringing them together. I'm going to get you in a second, Deneen, but no, the data centers, just if you get any pushback, you could look back at a past meeting I had. How much water, one of the big complaints is the resources. How much water does one chat GPT prompt use to cool the server? Anyone want to have a guess?
Mm,
Typical
mm-mm.
on average. Does anyone want to have a guess?
I'll guess 10 gallons.
No, 1 teaspoon. 1 teaspoon of water. Look it up right now. One
So
teaspoon
why are
of
they
water. Now,
complaining?
now, okay, well, that's a good question. How much water does it take to make a single hamburger? The cow has to drink, the grain has to grow, this has to be cleared.
100 gallons.
You're still far off. 600 gallons. So a hamburger is
So
600 gallons and a prompt is a teaspoon. Now, there are billions of prompts happening every day. It is a real problem. I'm not going to deny that. Okay, that's definitely. But please cut the hypocrisy. Don't you dare tell me that while you're eating a hamburger, a chicken sandwich, 100 gallons, a cup of coffee. Okay, a cup of coffee, 30 gallons. We are a parasite on this planet, and we are really taking all the resources in all this. And it really, really is something that needs to be addressed. But Mark and Aton, when you talk to those people, get the facts straight about all of this because right now, I think there's it is a problem. Things need to be fixed. We can't ignore things. We can't ignore the environment. But for God's sakes, talk on a level of truth and not on a level of emotion. That's what I like about the whole investor end. It's not, they're not going to say, "Oh, it's a crappy view." I once moved a girl into a dormitory at NYU and she started crying hysterically because she didn't like the window treatment on there. Okay? Eitan's smiling. That girl is Eitan's sister, who 30 years later is now like a renowned doctor and phenomenal woman. Okay? Research remarkable stuff. And I remember this, she was crying because of that. But I don't want that in real estate. I'm going to get it, but I'd like to avoid it whenever possible. Okay, Deneen, wants, needs, and brags.
Okay, yes.
Mm,
I've got a single family home, two bedroom, two bath in Dana Point in the Lantern District, which is 2 blocks from the ocean. The
yeah.
whole area is being redeveloped. The seller turned down an offer for 1,510,000 and she's now shooting herself. But she would accept an offer for 1,450,000, even lower. She's just ready to move. So anybody looking for a cute little cottage, and it's been completely fixed up, redone like three
Amazing.
years ago. Everything's new.
And Dana
So,
Point is absolutely beautiful. I've been there. But what's the big hotel? Is it the Ritz? It was the Ritz.
uh, yeah, Ritz-Carlton, and there's also another one. But
Absolutely beautiful. A lot of times the movies when they show like California, like that's like the shots that they get of the water and surfing, and it's a remarkable area. Very, very beautiful.
okay, I have
So
one other thing.
please.
I have a cleaning lady in my complex that she owns a home out in Menifee, which is kind of by Temecula, which is a wine country inland from Orange County.
Mhm.
She somehow, her husband lost his job. They fell behind in their mortgage 4 months back. But since last July, he got a new job and he's been making his payments. But they still are the lender. I told her, call the lender and try to get a loan modification. The lender is forcing her to do a whole new loan for 40 years at 2.5% higher interest, which is ridiculous. She can't afford it.
Mm.
Anybody got any ideas? She's like 23,000 in arrears that she needs to pay to catch up, and she just can't do it. And I don't want to see her lose her house.
Yeah, and certainly the expenses are no good. There's no way that she could get a bridge loan from somebody else. I mean, that's the obvious question. I guess the answer.
Yeah, nobody will give her a loan because she was in arrears, and they applied the payments she's made to the back payments. But and the property is worth like 630. She bought it for 577 4 years ago. So
Mm.
it's got equity, but
Yeah.
just
Sometimes people are just, just hard. You got to count your blessings because some people really have no way out.
I know.
Um,
It's so sad.
and
I
and it's
hate to
very
see her
sweet of you
lose
to
it.
try and think of a way to help this person. Um, and I'll try and think through if anybody has any ideas. It is good to bring it up into a mastermind because maybe somebody could come up with something that
Yeah,
is
or if anybody has an investor, I mean, I'm just thinking if someone wants to bail her out, but then own a portion of the property, um, I don't know. It's
okay. With
a
with
long
the,
shot.
with the renewed equity, what would be the loan to what's the ratio?
The value now is about, on conservative 620, but it's a brand new home. The home was
So
built in
so
21.
620 and how much debt is on it?
Just 23. Well, she has a mortgage for I think 520. She has a
520. So
big
it's still a
mortgage.
20% loan to value. Oh no, sorry, it's less than that. It's like
Oh
18%.
yeah. Yeah.
Yeah, I mean it's even less. And with that extra in arrears, it's even lower. It's a tough situation. Again, I don't know if
Um,
Mark wants to chime in on that, but let me think it through. I think it's very sweet, guys. I really do like what Deneen is doing here. If we can make this a forum to help people as well, I've never regretted giving to a cancer charity. I've never regretted trying to help somebody out that genuinely needs it. I've never regretted that, and I think this is a great forum. And I can tell you, I don't have the science behind it. I can't prove it to you, but it always comes back to me.
oh
Always.
yeah, tenfold. Yeah.
Always. There's just, in fact, there was a Harvard study about this. We could get into that at some point. That really it's the joy of giving and being able to try and help someone. The world's turning their back on this person, and Deneen is trying to do something here. That's why one of the reasons she's so special. Um, okay, wants to eat some brags. Anyone else? Okay, guys, look, this was great. I want you to come back on Friday as well. We'll have still some other ideas. If you take me up on that challenge, very, very simple. Open up your MLS, take your target area. You want the exact same criteria for the homes for sale, the homes for rent. Copy all of them, make it a gigantic data dump, put both separately into ChatGPT, and be able to identify what would be a good return based on what the prices are in the neighborhood. You'll have to take, again, I like to say, find the dead bodies. You got to find what the problem is. Sometimes there's a real problem with the house. It might be that it's located right next to a sober house and nobody wants to live there. It could be that there is some specific issue with the foundation. I don't know. Zoom user one who's got your hand raised. Who are you, Zoom user?
John Bainton from Connecticut.
Hey, John.
How you doing, guys?
Fantastic.
Hey, I have a kind of a creative idea for your friend that is about to, lose their home to a crappy situation. One thought is if you find an investor that she could sell the home to and immediately get equity out of her home and then prepay the rent to that user, and then there's you could kind of play out a situation where she's got 5 years where she can buy it back at a certain price, right? So you're kind of like insulating the investor with some prepaid rent out of the equity of the home, and so there's like a lowering the risk for the investor, and then the investor always has the house as the asset to reinforce the loan.
Okay. I'll talk to her.
He's got a point. So,
Yeah.
and John, in your experience, what kind of return are they looking for? It must be pretty big.
I mean, I think you got to find just a reasonable return. If she's able to pay her rent, listen, her whole golden nugget here is the equity in her home. So she's willing to risk the equity in her home to pay rent that at least covers the cost of the home. With a
The mortgage.
marginal,
Yeah.
like a return on investment. Maybe 5-6%. And an investor, listen. The vulture will say, listen, if she fails, they get the house at a pretty good rate, right? And the angel side of this is that you're helping someone out while you're making like 5%, which is way better than you're gonna do other market investments these days.
So what you base it on, like a 30-year loan, interest only, paid out over 60 months, and then there's a balloon payment at the end that pays off the investor. You
basically have a pre-agreed a window of time where she can execute to buy the house back, and when maybe it's listen, she's in a really bad situation, so she's might have to refinance regardless. So this might buy her a little more time, and can help maybe keep the carry costs flat for her, and the investor will maybe make a few bucks on the back end.
Yeah, good idea. Okay. Let me look into it.
And if they are vultures and she can't pay, he's right. There's some built-in equity that they actually
but does the investor pay back the bank?
No, the investor buys it.
They're going to buy the house. She's going to sell the house to them, and then she's going to remain a tenant during a certain period of time where she's got the option to buy it back.
And Deneen makes a commission on that sale?
No, you know what? I wouldn't even do that. I would just do it for.
I was thinking, creative solutions. Investors there's not many deals out there for many investors. And that's something that we really didn't touch on today, is that I've got investors that just are so sidelined because the end users are pushing them out of the market.
Thank you.
Mhm.
Eitan, let's talk about this later. We will bring up and take more of a focus on how to seek out these investments and try and unearth them, as if you will. Like I started saying, Stanley Steamer, if you can make some friends there, they're finding all the disasters. So if that's the kind of thing that you might want to do. But that said, guys, it's 9:59. We do need to go. Once again, I'm going to see you on Friday, I hope, 12 noon, giving those Californians a break for the same topic, encore topic. But again, it's always a little bit different. And then again on Wednesday, 9 a.m. Eastern Time, talking about using meetings like this as a means of marketing yourself. Pretty cool. I'm kind of psyched. Woohoo! Guys, good to see everybody. And again, if you do take me up on that challenge that I was saying, please, please, please email me, text me, let me know about what your strengths and weaknesses are in this area. I'd love to hear from you. Thanks so much. Oh, and lastly, Zoom user raised the hand. Is that John again?
I didn't raise it again. I just never took it down.
You never took it down. Okay, guys, thanks so much. Make it a great day, Eitan. I'm going to send you a new link shortly, and have a great week.
Thanks. Bye.